if we do get that pushback or signs that those Mexico tariffs, call it the surprise of last week, are pulled back, one would assume that would be good news for the markets. At least that's what the futures are suggesting.
I think it has to be. You know, obviously, it's a big thing down here in Texas because of so much trade with Mexico, but it's also a big thing because Mexico, there's so much two-way trade. You know, the thing we always talk about with China is it's mostly one way, right? It's them importing into the U.S. There isn't as much going the other way. There is a lot of supply chains going both ways in terms of Mexico. So I do think it would be a real relief, not to mention it would close off, you know, it's kind of running a two-front war right now in the trade war. Only having one would certainly be preferable to the markets.
Yeah, no tariffs or any kind of a resolution with Mexico and or China. That would be a positive for U.S. equities, or could still this idea about a global slowdown still weigh on us?
Well, certainly some amount, because the China thing's certainly not over, right? There's going to be at least some weighing, but I think the problem was we're in a place where all of us are trying to figure out, okay, what's the worst case? Because we know, you know, tariffs are supposed to roll up roll, you know, higher every month. And so we try and figure out how bad it's going to get. You know, I said, well, I kind of think worst, you know, quote unquote, worst case, it's chop 1 percentage point off of U.S. GDP. That's a lot. So again, hopefully that's my worst case, but I don't really know because no one knows exactly where it would lay out. If you get the Mexico part to come off, you know, maybe you say your worst case is half of that, which is obviously preferable in terms of what the market's worried about in terms of teetering on some sort of, you know, recession or a real significant global slowdown.
And even if Congress does what the reports say and they say, no, we're not going to do these tariffs on Mexico, the president could veto that. Then, of course, you have to go back to Congress and see if they've got the 2/3 vote to override the veto. Either way, Bill, if the tariffs stuck, is there any place to hide in the U.S. equity market, any measure of safety out there?
It's really hard because the stuff that's been holding in really well is primarily the interest rate sensitive. So the utilities, the real estate, staples. They look really expensive to me relative. So now that the market's so zoned in on that, and obviously you look at U.S. Treasuries at a 210 roughly on the 10-year, that looked to have discounted a lot of bad news. I mean, I'd probably rather lean into it a little bit and go towards the more cyclical side. You know, there's some of those sectors are pretty close, like an energy sector, that are essentially pretty much down to where they were on Christmas Eve again, or at least very close to it.
Does energy look good to you?
You know, I don't even want to go there.
You're a
but
Texas
yes,
guy, Bill. Come on.
I know.
You probably have an oil
me.
derrick in your backyard.
No, luckily not. But or maybe I wish I did if I owned the backyard. But no, I guess we do think, you know, particularly high quality. You know, we'd avoid some of these. You know, exploration production companies, but the integrated oils, the ones that aren't going anywhere, they certainly seem to all have been painted with the same brush. Again, it makes me nervous because they just, you know, it seems like you can't get any good news out of that side. But I guess it's usually, as they always say, always darkest before the dawn.